Inflation plays a big part in spending because if the price of everything doubled tomorrow, well, you'd only be able to buy half the stuff that you can today. And if you can only buy half the stuff, that means half the businesses are going to be making money. And if only half the businesses are making money, that means businesses overall are going to be making less money, and that's what causes an economic slowdown. So if you see high inflation, that means people spend less money, and if people spend less money, businesses make less money, and if businesses are making less money, that ultimately slows down the economy. This is why spending is important to understand. But you also have to understand inflation. In 2021, the Federal Reserve Bank kept talking about how they wanted to hit 2% inflation. They said hopefully we'd hit it by the end of 2021. That clearly did not happen. And now their goal was to hit close to 2% inflation by the end of 2022. Now they're saying maybe 2023. The goal of the Fed is to get down to this 2% inflation, but it doesn't look like that's going to happen anytime soon. What they're predicting right now is that in 2022, we're going to see inflation max out at 8.5%. This is the current prediction on the table. Once we hit 8.5% inflation, which is higher than what we have right now, once we hit this 8.5% inflation, that will be the peak, and then inflation will start to fall. And the prediction for the end of the year is 5.2% of 2022. So this is end of the year, and this is beginning. So inflation is expected to get worse than what it is right now, and then it will slowly start to get better. Now, 5% inflation is pretty high. It's more than double, it's almost 3 times what the Fed is trying to aim for. So that's still extremely high inflation, which means that it will become more expensive for you to continue living your life. Because what you have to remember is that if inflation slows down to 5.2%, that doesn't mean that the prices of things go down. That just means that the prices of things don't grow as fast as they were before, but this is still extremely high. So let me kind of diagram it on a chart like this. So the price of things have been essentially skyrocketing. And if we go down to 5.2% inflation, what that means is the price of things are still going up, just not at the same rate as they were before. Now I know these angles don't particularly resemble the numbers that I showed you, but what I'm trying to show you is the price of things are still expected to go up extremely fast. 5.2% inflation is extremely high. It's just not as high as it is at 8.5%. So this means that spending will continue to slow down, assuming that people's wages don't grow as fast as inflation. And most people's wages are not growing by 8.5% a year or even 5% a year. So if your expenses are growing faster than your income, either you're going to have to go into debt to support your lifestyle, or you're going to have to shrink your lifestyle, meaning you're going to have to buy less stuff. And we know that in our economy runs on spending. So if people are spending less money because they can afford less stuff, that means other businesses are making less money, which means businesses have less money to hire more employees. They have less money to go out and open another plant. They have less money to go out and open another store. So if businesses are making less money, you see less growth, less innovation, and a slowing economy. And this brings us to number 2, understanding the economy and why people are worried about the economy slowing down. So this survey interviewed economists, fund managers, and strategists, and out of all the people that they surveyed, they guessed that the Federal Reserve Bank is going to increase interest rates 4.7 times in 2022. Now this is something that you want to pay attention to, because now we're starting to see interest rates go up, and when interest rates go up, that makes borrowing money more expensive. If it's more expensive to borrow money, less and less people are going to go out and borrow money. I mean, just think of it like buying a house. When home prices go up, less people are going to be interested in buying that home because it's more expensive. Now, generally, that's how it works. You're going to see exceptions when mortgage rates fall because that makes housing more affordable. But in general, when something is more expensive, less people want to buy it. When something is on sale, more people want to buy it. That's why you see such big lines at Macy's on Black Friday, or at least you used to when people actually went to the store to shop. So this is what you have to pay attention to, is the cost of money is going to get more expensive. We're going to see a number of rate hikes in 2022, unless something dramatic happens and that changes. But we're expected to see a lot of rate hikes in 2022, which makes borrowing money more expensive, which means that people will ultimately be spending less money. It all goes back to spending. Just think about it when it comes to mortgages. When mortgage rates fall, more people want to go out and borrow money and buy a home because it's cheap to borrow money. But as soon as we started to see mortgage rates rise above 4% in 2022, we saw mortgage rates drop instantly. People didn't want to go out and pay more money to buy a home because now that same home that you wanted to buy is suddenly more expensive, even though the home price didn't go up, because the cost of borrowing money to buy that home is now more expensive. And now, to make matters a little bit worse, we have this going on. We're seeing a resurgence of this pandemic in different parts of the world, and this has pushed some countries like China back into lockdown, which means that now China's supply chain is being messed up. And remember, we import a lot of stuff from China. We manufacture a lot of stuff in China. So now these Chinese manufacturing plants are being forced to shut down again, which will ultimately affect the supply chain of items coming into the United States, which means we're already facing a major supply chain issue. We're still facing product shortages. We're still struggling to get items into our stores, and now it looks like it's going to be getting worse, which could ultimately affect the prices of things because we can't import things if the manufacturing plants are shut down, which makes things more expensive, which ultimately makes it harder for you to go out and spend money, which would hurt the economy again. And then of course we have the conflict between Russia and Ukraine to top all of this off, which is causing energy prices to skyrocket. Just look at the prices of gas. So now we're starting to see energy prices, oil prices so much higher than they were before, which means that for regular people, now you have to pay more money for gas, you have to pay more money for groceries, and you have to pay more money to go on vacation, which ultimately goes back down to the economy and inflation, because now you can spend less money because everything is more expensive. If you do not have wages that are keeping up with the rising expenses, you're not going to be able to spend as much money as you could before, unless of course you go deeper into debt. But assuming you don't start maxing out your credit cards, you're going to have to lower your lifestyle and spend less money, which means businesses make less money, which ultimately hurts the economy. This is why you're starting to see more and more people get worried about the United States economy, because we have a lot of uncertainty and we have a lot of factors affecting our economy. If you enjoyed this shorter clip from my longer videos, here's another clip that I think you'll love. And while you're at it, if you're interested in learning more about how to invest your money in real estate, our team put together an amazing guide on real estate investing. This guide goes over what real estate investing is, how to start using real estate to generate cash flow, and how to build wealth with real estate. This guide is completely free when you sign up for our daily newsletter. So if you want to read our guide on how to start investing your money in real estate, you can download that guide just by clicking that button right over there. Thank you for watching, and as always, keep hustling.